We'll start off our conversation here with the dollar yen. Now, for those that have been watching the videos, you know that I've been watching this dollar yen pattern for quite some time, and clearly it has some significant weight. We had a very significant run-up beginning in September of last year, or a little bit earlier, and it had peaked around May of this year. All right. Now, since then, we've had a consolidation pattern, a nice rising trend line here as a floor, and a series of tops, which has progressively altered its bearings. Now, you could also say, what about this trend line that we had from the peak here? And we've had multiple breaks on the way without follow-through, nor did it necessarily stand up too much in the way of reversal. All right. This is why we have to be very cognizant of the influence of trend lines. Now, the trend line itself that we are currently looking at was also kind of a false portent for traders that were simply looking for the technical level to hold up or break down. I know a number of people were looking at this pair and saw the slip that we had below 97 and presumed that that would be a immediate breakdown, that we would have tremendous follow through, unwinding the significant pressures that have been building in this technical pattern. That was not the case, however. As you saw through the end of the trading session, we moved right back up into this congestion. Now, why was the market unable to make something of that very substantial trend line break? All right. Now, some might question the influence of the trend line itself. I think that it carries some very substantial weight, and I don't think that the false break that we had necessarily undermines its influence going forward. The important thing to understand about trend lines is that they cannot work all by themselves. You have to incorporate them into the bigger picture of technicals, but also of fundamentals. Now, given the importance of this level, right, looking at the influence of this trend line over the past, this trend line has been developing since the beginning of the year, a break to the downside would be a very substantial move for this market. It would suggest that we are making very significant strides towards a much deeper change in momentum. In other words, we would be looking at a very sizable potential bear trend. All right. But we were heading into the final 24 hours of the trading week. We did not have much in the way of key event risk. All right. We certainly did have some data on the docket. We had the Japanese Cabinet Office economic report and the CPI figures, of course. Notable, but not necessarily major market movers, nor was the U.S. data for that matter. All right. And nothing there that would really speak to what is moving the yen crosses in general, risk trends. So seeing a move up to that trend line and potentially breaking down does not necessarily mean that you're going to have the follow-through. I say this probably far too frequently, but it's not the breakout that matters, it's the follow-through. That's where the trade is. Seeing a market move into follow-through, whether it be a breakdown or whether it be a reversal. And we simply did not have the momentum into the final trading hours of the week to really put forward a move of that magnitude. So from a technical perspective, if you're looking at the purely academic, pulling trend lines off of meaningful peak swing lows, or you can pull it off of meaningful swing highs. I like to look for 3 points. Right? 2 doesn't cut it for me, because 2 points can be virtually anything. Any 2 points can make a line, but a third, at the very least, confirms. All right? This is a higher time frame pattern. The higher the time frame, typically, the greater the influence of the trend lines. All right? It has all the elements necessary to make it academically appealing, but it does not have the fundamentals necessary for follow-through. And that is the critical component that we were looking for here. All right? So we look at something like this, and the elements, the backdrop of this trend line, all right, putting it into context of the market conditions, helps us better gauge whether this is going to be a very substantial market mover in the period, the time frame that we have. Now, going into next week, we definitely have a lot more event risk on the docket. We have the FOMC rate decision on Wednesday. We have the Japanese central bank's policy decision on Thursday, Friday. That's a big round of event risk. But realistically speaking, you have to be very careful. because in the lead up to that, we might not see a big move from this pair. It might be a wait and see until this comes around, and once again we could see another dip below this level, and it would not necessarily instigate the move. All right? This is why when we talk about trend lines, and many other people talk about trend lines, they talk about breaks or confirmation, whether it be a break to the downside, confirmation for a close and continuation below 97. So you look for a catalyst, something that's actually achieving this move, as well as the actual close for confirmation, or you can see a reversal under the same circumstances, something that's really driving it higher, whether it be dollar bullish or whether it be risk on that really helps out the yen crosses, and then you see the technical break and hold above that level. All right. Now this is not just unique to the dollar yen. We can look at a number of pairs with the same critical eye. The pound dollar. All right. We had this very substantial trend line here. This is a long-term wedge pattern. We've been watching it very closely. I would say that this is certainly a tentative hold, and we are going into this knowing that there's major event risk this past London session. It held, and subsequently we are still positioned very keenly right there. Now going forward, this is going to have the same opportunities as the dollar yen. It could be a breakout or reversal, but the thing that you need is to show conviction in the move, and that requires the fundamental catalyst to achieve it, as well as a close, a meaningful close, above or below a certain threshold. I'm looking at 162.50 and right around here at 161 as my key. Euro pound. All right, you have the 200-day moving average, not necessarily a trend line, but of similar quality. We also actually have an internal trend line of this channel, and you can see it falls right here at around 85.35. I'm not a big fan of internal trend lines. I know some of my colleagues here in Daily FX are. It can have just as much influence, but the point is, it's not necessarily the trend line itself. It's the elements that evolve around it. Not only do we have a fundamental consideration here, the euro's health, and we do have a lot of event risk next week for the euro and the pound's health, but it's also about the other factors. Look at this. We have a 50% fib of this move here. We have the 200-day moving average, and we also have a nice range element, all right, this long-term internal trend line. So you can add all those factors together alongside this doji candle, and it speaks better to the conditions that we have with that individual trend line. We can even take it to something higher in terms of just looking at the dollar itself. Now, this trend line that I was talking about here was quite substantial. We did get a breakdown and tentative follow-through, yet the follow-through has been somewhat weak on that trend line break. I would say that that trend line break was quite significant. You saw the market pay attention, but the continuation is curbed by the fundamental elements, the fundamental aspects. And further down, you come into a nice confluence of very significant technical levels, a 38.2 fib of this run from the swing low from 2011 to the swing high in 2013, as well as the 50% fib of the 2012 swing low to the 2013 swing high. All right, so a lot can come in and evolve whatever the conditions are. Now, a lot of these are just, you can be looking at a range reversal or a trend line reversal, which is something that we had with the S&P 500 a number of times on this floor. All right, we also even had a false break to the downside and came right back up. You can also have a trend line breakout, which is the circumstances that we've had with the dollar and the dollar yen. All right, but follow through is very different than just a technical break or technical reversal at a trend line. The trend line can be important, and it certainly is a factor in the overall trading picture, but you have to put the complete picture together. All right, to make a high probability scenario, you need all the factors, and putting it all together offers you much better trades. Lots of trend lines. I can run through a number of trend lines. You have a trend line rising, trend line here from Aussie USD. This is a daily chart. The Euro USD is at the top of this rising channel. Also happens to be a much bigger trend line here. This is only the third point of test. You have numerous trend line situations in the Euro Yen crosses. Euro Yen, Pound Yen, and Swiss Yen, all European currencies versus the Yen crosses. There are a tremendous number of trend lines out there. But whether their importance will offer us trade opportunities depends on the broader conditions. Keep that in mind, incorporating your trading, and it will help, I think, filter out false starts, and confirmed trades. All right. Good luck trading out there, guys. Have a great weekend, and we'll do our next Forex strategy video next week.